Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. In January, I compiled and published my annual video commentary on LME 3-month copper. Please look at that in the YouTube index to find it. In this, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence, recreated here on this daily chart, is the bright red 2009 to 2016 bullish shift pitchfork. And specific key piece is the bright red upper time, which is currently at 13,396. That sits just above the top of the market and has capped, despite being significantly pierced on one occasion, that's capped the market between the start of January to the start of March. Indeed, this is the key piece of overhead resistance and only piece of resistance seen here since the break up and out of the recent showrunner for this market in mid-December last year, the July 22 to January 23 shallowy bullish shift pitchfork. So this leaves us with the question, what now? Well, there were two possibilities, with one of them having a subplot and none of them have been ideal. The first possibility was, and it is the one I'm sticking with right now, to look at the whole 2026 action so far as a possible complex top. And the best we can have as a proxy for a neckline is the 50% Fibonacci line of the November 25 to January 26 move at 12,571. The subplot to this is that we also had a multi-bottom diamond pattern formed between late December 25 to very early March 26. It is not an easy diamond pattern, and I had issues with possible false breaks such that I held back from calling it a diamond top pattern, but not so anymore, as we broke down through the 50% Fibonacci line just under 2 weeks ago and have stayed below. For such a pattern, we have a primary target at 11,784, which was reached at the start of last week, and a secondary harder to reach target X down at 11,002. I'm now wondering just how hard will be the secondary target X to now achieve. Now the second possibility was to look at this whole 2026 action as a possible bullish halfway hesitation, running from as far back as mid-November 2025 action. I on this 2 weeks ago, and I quote, said, to be honest, this is even more unlikely, but I would be churlish not mentioning it as a possibility. End of quote. Which just about sums that idea up. So what's next? Well, now, we have some support from what was left of the broken upper time, currently at 11,855, of that old July 22 to January 23 shallow bullish shift pitchfork at the end of 2 weeks ago. That helped push up prices, as well as the neckline, currently at 12,068, of the smaller October to November 2025 head and shoulders continuation pattern, plus some Fibonacci's between 11,980 to 12,109. I favour the old broken upper time as the better support, and this I will suspect will be tested as we are now approaching that dark blue extension to the downtrend, which is currently at 12,470. Indeed, we are actually testing it today, and that makes actually part of the diamond top pattern that we've exited. So the market's going to get squeezed in between these two, the broken upper time and the dark blue downtrend, over the next 3 weeks, and it may be even sooner. That may be interesting to see which one triumphs. LME 3-month aluminium. There are two significant immediate patterns here on this daily chart that are running this market higher, and they're ones I've highlighted before. The first is the bright green April 25 to date, very large, rising, expanding wedge pattern, currently 29.97 to 34.74. The upside of this pattern has been breached on a number of occasions throughout March, including yesterday, but has not as yet been definitively broken. The second pattern is the mid-December 25 to start of February 26 dark blue bullish shift pitchfork. We were yesterday testing the upper time, currently at 35.32, after having breached it earlier in March, but at the time we only had the single close over it back then. We didn't break over it yesterday. There is a third longer term, much more longer term pattern here as well, and that is in November 2015 to April 2020 bullish Andrews pitchfork, transposed onto this daily chart from my longer term monthly chart and highlighted in purple. The nearest part is the purple middle time, which is support today, which is currently at 34.28, which the market has used as a base for a move higher. This middle time had previously helped the bright green upper trend line to cap the market. Of all these three, I rate the dark blue bullish shift pitchfork the best at the moment in showing the way higher, with potential help at some points from the purple middle time and the bright green very large rising expanding wedge pattern. Possibly, actually, that's the weakest of all the three patterns. The key question over the next week is whether the market will overcome the double top peak at 35.46 formed earlier in March, because if it does, then we may have a fairly free area overhead, all the way to the high seen back in March 2022 at 36.60 and 37.42. So, caution. Finally, I note the gap below between 33.03 and 33.75 formed this past weekend. I imagine at some time the market will try and fill in that gap, but it doesn't look like it will be this week. LME 3-month lead. Back in mid-January, the market tested and failed at the 50% Fibonacci line of the May 24 to April 25 move at 20.98. Indeed, I think this 50% Fibonacci line also caused the high seen back in November last year, as well as earlier in January this year. Since then, we've pulled lower, down through the close-knit at the time moving averages, and in the process the market created a small January base head and shoulders top. I also noticed 4 weeks ago another significant pattern developing. As I said at the time, and this was back in 4 weeks ago, and I quote, "The whole action from mid-January today as a possible bearish cat's ears pattern. This is akin to a double top forming after a steep fall, such as we have seen form since mid-January." End of quote. In truth, though I expected a move lower, I did not expect to achieve all of it in 2 days, as we saw 2 weeks ago, reaching both primary and secondary targets below. Since then, prices have somewhat stabilized between the January 25 low at 19.16 and the low from April 25 at 18.88, as well as in between the 2021 low at 19.08. Do I think prices will maintain and possibly revert back up? Well, I didn't think so right away, though we have an optimized downtrend which we've just broken above today, from late January today, cutting across the path of the market, and that's currently at 19.22. Now, I thought that might prompt some bearish pressure or bullish reversal, which is more likely at the moment if it is broken, though we haven't broken and confirmed above it as yet. We've breached it, but not broken it, though I don't rate it much at the moment. The reason why I'm less optimistic about a move up comes back to my final point. It's a point that I've been making here since the start of 2025, and I'll continue to do so going forward. It has been, and still is to me, the most important point of all. So at the end of December 2024, we saw that the year of 2024 had created a very large and rare annual key reversal down in LME 3-month lead. We haven't done that much since, until very recently. Indeed, prices, what are they? They're only about $30 or so dollars. Not even that, say about $25 lower today than they were at the end of 2024. So this is not an endorsement of the annual key reversal down, but neither is it a strong countermeasure or repudiation of it. Hence, I still say, even now with prices where they are, that one should still look at all things going forward in this coming year and beyond, in this metal, in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.